You are listening to Mining Stock Education.
I made so much money in Russia for 23 or 24 years. I went into Russia in 1989 with Adolf Lundin in a closed-end Swedish-listed vehicle that was a legitimate 100-bag.
Thank you for tuning in to Mining Stock Education, and it's my pleasure to bring to you today an interview with Rick Rule, returning guest to the show. Rick, thank you for coming on Mining Stock Education. Obviously, the end of 2024 going into 2025 was excellent for you and your precious metals investing and speculating. Where does that rank in your career in terms of your best performing years, and what did you learn about yourself and the market as a consequence?
25 was my third best year. Had I been young and aggressive, it would have been my best year. Being an old, cautious guy in a rip-roaring bull market, it's not a good thing in retrospect, but I am who I am, and I had a pretty good year. I had anticipated a good year in 25, but not a year like the year we had, which I think no sane person would have anticipated. And I need to say, Bill, when history is written, I think what you'll see is that the year we had in 2025 was rear-looking rather than forward-looking, in the sense that I think what happened in 2025 is that the precious metals markets were a coiled spring. They hadn't moved in 2020, 2021, 2022, 2023, and that pent-up tension unleashed in 2025. I suspect looking backwards, the tension's off the spring, which is to say, I don't think 2026 will be as good as 2025. But I also think that the fiscal pressures on, in particular, the U.S. dollar over the next 10 years means that this precious metals bull market has real legs, but real legs only for those who are patient. People who expect the 2025, that precipitous up move, is the shape of things to come, I'm afraid will be disappointed.
And what did you learn about yourself the most?
I guess I learned that finally, after 73 years, I have the ability to put things in context. I said going into 2024, so 2 years ago, that there was enough beta in the market. There was enough money to be made playing the extent to which precious metals outplayed the broad market, that I would concentrate most of my own money in the best of the best and not chase returns in the rest. I did that. The consequence of that, of course, is that I made less money than some of the more aggressive people. But in retrospect, I think that was a very good decision. I exposed myself to almost no operational risk. And the amount of money I made relative to the amount of money that I anticipated making was astonishing. From my own viewpoint, I think I played the game pretty well. As I say, it was my third best year in recorded history. And had I been young and aggressive, it would have been my best year in history.
Rick, I remember when I had one of my first big wins in the resource sector, I was driving my little girl to gymnastics practice, and I can see myself sitting at the intersection saying, wow, this last month was amazing, and I made more in this last month than I did in years running a construction company. Now that your life is set in terms, you could make $1 billion next year, it wouldn't affect your life at all. So are you still in it for the love of the sport, or what really motivates you?
The love of the sport, helping younger people build companies and careers, much in the way that people help me. And my legacy, I hope, the reason I do interviews like this is my hope through the Rule Classroom that I teach a minimum of 25,000 people how to invest in juniors. My gift to 25,000 people will be the gift that I have been given by 50 years experience in the market. And my gift to the mining industry will be 25,000 good sources of capital who aren't swindled by promotional losers. Finally, my wife and I will give, upon the second of us to die, the vast bulk of our estate to philanthropy. And I'd like that number to be as large an amount as it possibly could be. I have some things I'd like to see happen in the world that I don't know how to cause to occur. So over time, I'll fund them out of my own estate. I don't believe that my own goals for humanity give me a call on other people's wealth. So I'm not trying to cause these things to occur through government. I think it is more honorable of me to fund my goals with my money, not yours.
BHP issued a big silver stream. We also saw Lundin Gold sell a silver stream. What's your commentary on what this means for copper developers, as well as the silver market in general with all these streams being issued?
Every now and then I get one right when it's really obvious. I've been saying very loudly now for 2 years that the copper industry is going to have to spend between 150 and $250 billion over 10 years to maintain their current production. Just maintain. But copper is in a deficit, and demand for copper is growing. $250 million is at least $250 billion, is at least $100 billion more than the industry has. They're going to have to raise it. So if you look at that $100 billion shortfall, and you look at the fact that byproduct precious metal streams, particularly silver, structured in a public silver streamer, trade at 15 to 20 times free cash flow multiples, while that same cash flow going through a diversified mining company trades at 5 to 7 times cash flow, it's pretty obvious that the only way to enhance the capital stack in these big porphyry developments that makes sense, the only thing that can change is the valuation of the cash flow. The stream makes absolute sense. But Randy Smallwood, the departing CEO of Wheaton Precious, said what I've been saying for 2 years. The differential in the cost of capital means that the directors of the major mining companies who don't finance with streams are being irresponsible, truly irresponsible. I believe that Wheaton Precious, they paid up for the stream, as you should, for a very, very, very high quality stream. They paid up on a net present value basis. They paid up using a formula that doesn't give them very much value at all for any cash flow produced after year 10. But it's going to produce for 20 years for free. They also financed, giving them a fairly low indicated yield, 6.5% at current silver prices, gives them the upside for free. But importantly, because of the revenue stability, I think that Wheaton Precious, should they want to, could go into the capital markets and sell a 30-year bond with a 3 or 3.5% hurdle. Selling a 30-year bond, giving you a 3.5% cost of capital, while securing the upside at 6.5% and everything above that, and everything after 10 years for free, is a pretty good print. It's a really good print. People who are Wheaton Precious shareholders don't understand the gift that Randy Smallwood and the markets have given them. Similarly, the shareholders of BHP need to understand that their equity cost of capital in BHP, likely 13 or 14%, and they raised a whole bunch of the capital stack at 6. Not unattractive. A win-win deal. The Lundins are in the unique position of being able to create a royalty and streaming company that should be able to enjoy a similarly low cost of capital, really, truly, out of whole cloth. They used royalties that they already had to create this entity, in effect, spun it off for free, guaranteeing that shareholders in that vehicle will enjoy a higher market multiple than they would have had that revenue stream paid in the parent company, and opened the door to a vehicle that gives the Lundins, particularly with their reputations, access to a lower cost of capital than they could achieve any other way. Truly, truly, truly a win-win. Listen, this is important. People, the knock on Wall Street and Bay Street against the royalty and streaming companies has been that the big transactions that built them are a thing in the past. They're in the rearview mirror. And that's exactly wrong. Exactly wrong. The big transactions are in front of them. The transactions that built Franco-Nevada, the transactions that built Osisko, the transactions that built Wheaton Precious are in front of them, not behind them. And the opportunity is so huge that they'll have to syndicate them. At $4.3 billion, the next deal that comes up to Wheaton, the next $3 billion print, they're not going to be able to take it down. They're going to have to share it. This is really, really, really important news for the royalty and streaming space.
And any further comment on what Lundin Gold sold their stream on the Fruta del Norte deposit?
Yeah, it's just the lowest possible cost of capital that they can get. It's less extreme than what you get when you sell the gold credit out of copper company. I think when the time comes and Lundin Mining and BHP sell a stream on the Vicuña, on Jose Maria, then you'll see the beauty of that transaction. You'll see a massive stream, likely larger than the one that BHP just did. And you will see a stream that will fund probably half of the equity contribution of both companies building that deposit. I fund all of it. Very, very important. As I say, it's less dramatic, the reduction in the cost of capital, when you sell a gold stream out of a gold mining company, because they enjoy reasonable capital multiples at any rate. But the third generation of Lundins and their advisors are financially very astute. I would suspect that they saw a 300 and 400 basis point reduction in their cost of capital through this transaction. 300 or 400% differential in the cost of capital above $400 million is $1 million a month for a long time. It's a really good print.
Rick, I took on a new show sponsor, Lara Exploration, which one of the few places I could actually learn about it was at your symposium last year, and you and talking about it, as well as Adrian Day, who's also a shareholder. What is your thoughts on a project like that, where they're trying to develop a mine in Brazil, a historic prospect generator that wants to develop a mine, lower cost of capital, just about $500 million worth of capex? Is there a sweet spot there for speculators to where you're not looking at a multi-billion-dollar capex build-out to get into production? You're under that, and perhaps you can get into production a little quicker.
By and large, I don't like small mines. My experience has been that everything that could go wrong with a big mine can go wrong with a small mine, but a small mine can only ever make you small money. With Lara, you have a secret weapon, a guy named Miles, the CEO, and Simon. These are wonderful people. They are not going to bet the farm on this project. They're going to take their time on the project. They are going to construct a good financial transaction. And it still wouldn't surprise me, after they've done all that, after they've proven they can build it, if they sell it. They could easily be negotiating with the market, a time-honored technique among project developers, getting it to a certain point, de-risking it, and then finally, one of the capstones or the arrows of the world come in and say, okay, you win. We'll pay you full price. This is a good deposit, make no mistake. But not a great deposit. I don't object to it as a shareholder because I've done business with these guys for almost 40 years. They are very large shareholders, and they generally respect other shareholders. As to your sweet spot, Bill, you're an entrepreneur, and you, like every other entrepreneur, and me, like me at your age, I loved the seduction of a small capex property generating free cash flow, so that the company could grow ad infinitum without ever having to raise more money. I've just seen it work seldom in my career. So from my own viewpoint, you drill something off, you figure out what it's truly worth, and then you sell it to somebody whose business is building mines. Thus far, Simon and Miles have decided that they're taking a different route. But as I say, it wouldn't surprise me if they're negotiating with the market.
My co-host, Brian Lenny, who you know, he was able to interview Andre Gaumond for the show, the founder of Virginia Gold Mines. Would you mind sharing? I mean, that was an hour. And Rick, I just got to point out, it only has about 7,000 or 8,000 views on YouTube. And
Right.
if you want to grow as a junior mining speculator, my thoughts, you need to listen to a guy that created $1 billion worth of value from scratch and just get into that mindset. Anything you can share with listeners about your experience with Andre or perhaps Virginia Gold Mines?
I was Virginia's largest shareholder for years. And it's interesting that you mentioned Lara and then Virginia. The constituency behind Lara is the Virginia constituency. If you look at the bigger high net worth shareholders in Lara who've been there for 10 years, they were virtually all Virginia shareholders. It's funny that continuity you suggest. Andre Gaumond is the quintessential prospect generator. He developed exploration concepts and farmed them out using other people's money, only in the province of Quebec. Why only in the province of Quebec? Because he knew it. He had a durable competitive advantage in Quebec. He was dead honest. He wanted the people, is dead honest, he's retired now mostly. He wanted the people who farmed into his projects to get the best possible deal they could while maintaining upside for his shareholders. When he had a project in northern Quebec that frankly gave up results too easily. He always intended to farm that thing out. But when they did the surface work, the surface results that they got were so extraordinary that he knew that ground truthing it, putting 2 or 3 drill holes in it, wouldn't wreck it, would only enhance its value. Very similar, by the way, to Arequipa Resources, who had intended to farm out their project and accidentally discovered 11 million ounces of gold when they had a 500,000 ounce target. In James Bay, Virginia got the results too quickly. They put 3 holes in it, and rather than condemning it, they were better than they had anticipated and proved to a T the thesis. After that, I think the thinking internally in Virginia was, if you put 20 holes in it and you define the size of the target, you will greatly increase the amount you can sell it for. Well, that's correct. So greatly that they put 50 holes into it, and then 60 holes into it, and then 80 holes into it. At some point in time, the target was too tempting to sell as opposed to build. André did exactly the right thing. Many developers would want to see themselves as the centerfold in Mining Magazine, build the deposit, live on the salaries for 30, live on the free cash flow of salary for 30 years. André looked at what was within his range of competence and how the shareholders would be best served, and sold the deposit. Superb guy. It would be difficult for me to understand why an exploration speculator, particularly a Canada-focused exploration speculator, wouldn't listen to Andre Gaumond.
You like the prospect generator model employed by Lara and Virginia Gold Mines, but would you ever invest in a pure explorer in this market? And if so, what commodity would they be exploring for?
I don't care about commodities. I'm happy to make money in gold. I'm happy to make money in sand and gravel. I want an explorer that is led by a team who has expertise specific to the task at hand. If my guy is Andre Gaumond and his expertise is Archean terrain, 2 billion-year-old terrain in French-speaking Quebec, pardon me, and he finds himself exploring for copper-gold porphyries in 15-million-year-old ingredient terrain in Chile, I'm probably not going to go for it, despite the fact that I love him. So I want expertise that's specific to the task at hand. If it's full risk exploration, I want really, 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 really good data. I want to know that the exploration thesis is based by ground truth, not by a narrative that allows the promoter to capture capital from the market cheaply. And I want, if I'm taking the extra risk inherent in using my own as opposed to somebody else's money, I want a superb target. Really, really, really big target. Mostly when I invest in sole risk exploration, I got to have a drill hole. I got to have a discovery hole. I have to have the concept validated by the third dimension. I found on several occasions, I think back to Aurelian, before the discovery hole at Aurelian, that was a 60 or 70 cent stock. After the discovery hole, it was a $3 stock. And it was much cheaper at $3 than it had been at 70 cents. $3, you had a validated target. The exploration concept was absolutely wild. It turned out to be totally correct. And as I say, at $3, that stock was a screaming bargain. At 70 cents, it was a wild ass speculation. That's something that people need to learn. You need to pay up for data. It's good data.
What are the Sprott specific industry analysts using for the gold and silver price right now when they do their valuations?
I don't know. That's something you have to direct to Sprott. I am no longer an officer or a director or an employee of Sprott. I'm a customer of Sprott, and I'm a shareholder, but I am not responsible any longer for any internal investment methodologies.
Would you take a guess at what some industry-specific analysts are using relative to the generalist?
Well, what I read very recently out of BMO was $3,500 in terms of the gold price. Maybe they say that to the world and use something else internally. I don't know, but I'm struck by the conference calls that I've been on, the quarterly conference calls that I've been on for the last 45 days, how consistently both the issuers and the buy side have been at making earnings and net present value forecasts based on very outdated gold numbers. This may be a conservative practice, and I would suspect from a net present value, well, I wouldn't suspect, I know from a net present value basis, what I do when I'm constructing net present value models is I use higher current prices, and then I stress them in the out years. I actually personally don't believe that the gold price is going to decline much in the out years, but that's okay. I do it because I normally run three models. I normally run a forward strip model, a 25% discount model, and a 25% premium model. Publishing guys can't do that. And my experience on the buy side, on the sell side, is that most of the models that they're currently basing both their NPV numbers and their quarterly numbers on are, $1,000 or more below market.
Rick, I was not able to go to Vancouver in January for some of the conferences. You were there. I'd like to get your take on sentiment. I've talked to some savvy investors that felt like it was a little bit euphoric. Others said it was positive, but not quite euphoric. What was your take?
Off the charts euphoric, I found. In a sense, with maybe half the audience. The bad old days were here again. People were asking me questions about companies that were really amalgamations of butchers and bakers and candlestick makers. Companies that had no net present value, asserting to me that they were cheap because the pre-money market cap was $12 million, when that market cap represented no assets, but rather an option to acquire a dubious exploration project. Something else, though, that is very positive. I would say that in the best, as much as 25% of the juniors, the management team's acumen, their experience, both technically and also financially, in the last 10 years is almost immeasurably better. The level of people running the best of the best juniors, and I'm not asking you to compare them with the management teams that existed 40 years ago when I was cutting my teeth, but comparing them even with the management teams that existed 10 years ago, they are really, truly better. Very, very, very high quality group of people. Now, that doesn't do much for share prices in the near term. So a lot of the retail punters at MIF, or VRIC, they don't care about those qualitative measures. What they really care about is a 25-cent stock that they think is going to 37, irrespective of how or why, as long as it happens quickly.
What do you attribute the increase in quality of management to?
I think probably the ease with which the industry was able to raise capital in the 2002 to 2008, 2010 timeframe. I think for people who had been stuck in the bowels of the majors, that they began to break themselves free in that decade. The people who survived the capital drought in the period 2012 to 2020 turned out to be pretty savvy people. They got tested through privation. And I think the remnant, and I'm not talking about the length and the breadth of the juniors. The length and the breadth is still a wasteland of morons. But the best 20 or 25% of the juniors, particularly the best 10% of the juniors, are spectacular. I made it to the sort of consolidated Lundin booth and was able to talk to some of, not the Wojteks of the world, who I've known, my whole adult life, not the Adam Lundins, the third generation of a family I've done business with since 1974, but rather the youngsters working for them. And I was astonished at how smart, how humble, how hardworking, how hungry these teams were. I'm not pointing this out to endear the Lundins to the generators or speculators on your call, but rather to say that the very high quality groups, the discovery groups, the Lundins, Bob Quartermain, Ross Beatty, they've been able, in addition to their own talents, to secure groups of people around them in the organization who are superb. They are absolutely superb. And I think that'll yield benefits to us in the next 10 years.
Rick, do you think that the proliferation of junior mining education, namely and primarily from yourself as well as others, has helped investors hold management teams accountable more in recent times?
No. The Rural Classroom has 18,000 students now. There's probably, 2 million, 3 million punters worldwide. I think we will contribute over the course of a decade, but not yet. I think we have 5,500 people at the Rural Classroom who have completed the Introduction to Natural Resources series. When that number gets to 30,000, then we'll begin to make a difference. And, to be honest, some of the people who've completed the course think it's interesting, but they still act emotionally rather than rationally. It's difficult to substitute arithmetic for rhetoric. Feeling is much easier than thinking, and even if you've been taught to think, it's more fun and easier to feel until you bear the real cost of that in a bear market.
You referenced your friends Ross Beatty as well as the Lundins. Those two groups were able to see an opportunity in Ecuador some time ago and pick up deposits on the cheap before Ecuador turned more favorable. And then they've been monetizing those assets, including the Lundins still having a producing gold mine there. Ross recently sold his gold mine there, gold deposit that is. So where could you share some stories from your career, Rick, in which you've been able to see a jurisdiction out of favor, yet was geologically endowed to where you were able to invest, and then you got the lift just on the jurisdiction becoming more favorable?
Well, the best example of that was Peru. In the earlier part of my career, Peru, although it was geologically fascinating, was politically ridiculous. The central government was leftist, and they were far to the right of the Sendero Luminoso, the Marxist terrorists that operated in the highlands. Fantastic geological potential. The Peruvians eventually got sick of that. They elected a guy as president, Alberto Fujimori, who went to war. He went to war against the leftists in his own government, reformed the mining code, and then he went to war literally against the Sendero Luminoso. There are some people who suggested his tactics were a little harsh, which they probably were. But the truth was that he began to change that jurisdiction. I had the extraordinary good fortune of backing a couple of superb technical teams in there. I would say that we went in contemporaneously with the flak jackets being removed and far before the currency was convertible. But the consequence of that, particularly with Arequipa resources, is that we made an absolutely mind-boggling discovery there, which allowed us to sell after 11 drill holes a project to Barrick for $1 billion. It was superb. So Peru would probably be the best example. My hope is, in the last 2 years, and history will tell if I'm right or I'm wrong, that Argentina will enjoy a similar re-rating. I guess my best example, although we're not out of the woods there yet, I am in terms of making money, but that would be Congo. I began to invest substantial amounts of money in Congo in 1995 when Congo was in the midst of a civil war. The civil war hadn't been resolved yet. The most specific value proposition there was Tenke mining, where you had a family, the Lundins, who had been serially successful, and you had them in control of what was then the best undeveloped copper deposit on the planet, Tenke Fungurume. You had a company that had Tenke Fungurume, had 30 cents a share in it, cash in it, and it was selling for 19 cents. It was selling at a discount to cash. It had the first or second best mining financier on the planet. It had everything going for it. And I decided, if Congo makes it, this stock could go to $5. If Congo doesn't make it, I lose 19 cents. So if you juxtapose losing 19 cents or making $4.80, then you can afford the loss of the 19 cents. That's the sort of disaggregated bet you have to take. I took that bet, selling at a discount to cash. And lo and behold, it went to $5. And then it kept on going to 18. Amusingly, 10 years later, the same circumstance happened again. You had Robert Friedland with Ivanhoe Mining, with the new Kamoa-Kakula deposit. They had just raised money, both from Jokmek and, importantly, from Zijin and CITIC. The stock was selling at 63 cents a share and had 90 cents a share cash. So I had the best new copper deposit in the world, 6% copper deposit in a world where the median mined grade was 0.5%, in a vehicle controlled by Robert Friedland, a superstar who I know and love and trust, verified with an above-market placement from Zijin, CITIC, and Jokmek. I was able to buy 90 cents a share cash plus this copper deposit for 63 cents. Stupidly cheap. Stupidly cheap. Now, what could have gone wrong? Everything. Those opportunities involve taking a risk where if you're wrong, you lose all your money. So psychologically and financially, you have to right-size those bets. I'm waiting myself for the opportunity to return to Russia. For just those reasons, I seek out great geology accompanied by hate. Given that, as you know, I've had a banking organization for some time, and given that it's technically illegal, well, not technically illegal for Americans to invest in Russia, rather than going there, circuitously through Dubai or Switzerland, which would be the temptation, I've elected to stay out of the country. There will be a time, hopefully in my lifetime, where the conflict between Russia and the Ukraine ends, and Russia becomes investable again. My suspicion is that the distrust of Russia and the negative taste that has been left about Russia with investors and speculators means that there will be a 2 or 3 or 4 year vacation where people who have the courage can go into Russia and harvest the same type of rewards that I harvested in Congo and South Sudan and Syria and Peru.
That's definitely contrary. And I think you've talked bullishly about Russia, if I'm just trying to recall, back to like 2019. Weren't you talking more positively about Russia at that point?
I made so much money in Russia for 23 or 24 years. I went into Russia in 1989 with Adolf Lundin in a closed-end Swedish-listed vehicle called Vostok Nafta that was a legitimate 100-bagger. Now, I'm not going to lie to you and say I held it to generate a 100-fold return. Nor, frankly, was I in at the bottom. But if there's a 100-bagger and you take a nice fat slug out of the middle, it treats you very well. So I have been an investor and a speculator in Russia going all the way back to the late 80s. And Russia treated me extremely well for 24 years until it didn't. And then when it didn't in spades. It's the game.
And did you have to temper yourself with that positive bias because you had such a positive experience? Was it a little harder for you to draw back?
Yes, absolutely. I looked at what was happening between Russia and the Ukraine, and I thought that neither side is stupid enough to go to war, not understanding that politics is a real, how would you say, receptacle for stupid people. And I think my bias around the money I had made in Russia, and also my greed, frankly, when I looked at things, the companies I was holding, I owned 6 or 7 at that point in time. They were all world leaders. When I juxtaposed the risk, which I thought was low because I thought those politicians were rational, relative to the reward, which I knew was high, because these asset qualities were standalone. I mean, if you want to be in the nickel and platinum business, really, it's politics. You want Norilsk, or Norilsk. The same thing holds true for the potash business. Russian oil and gas assets, and frankly, Russian oil and gas technologies are superb, just absolutely superb. If you really want to be a full cycle resource investor, when you have the opportunity to be in Russia, you're going to do it. And when I juxtapose what I made in Russia over 24 years with what I lost, I don't feel so bad. When I look at what I lost in isolation, which is what I tend to do because it was more recent, I feel terrible.
With platinum and palladium's rise, Rick, did you have any of that lift with Sibanye-Stillwater on the NYSE?
I didn't. I know Neil Froneman very well. I've known him for 35 years. I'm a huge fan of his. I didn't have the courage to buy it because I know about the challenges, the sociological and political challenges that they have in South Africa. Sometimes knowing too much is a real impediment when people pull off the improbable. So I chose to play the platinum and palladium game in companies that didn't have the same political challenges, but they also didn't have the same quality of assets. And so I absolutely 100% missed that move. I didn't miss it in palladium. I have a small but reasonable position in the Sprott Physical Platinum and Palladium Trust, a product of my own authorship, which I kept. I have a decent-sized position in Ivanhoe, which is developing what will be the world's largest platinum mine in 2026. I have a reasonable position in a platinum and palladium explorer called Bravo in Brazil. So I participated reasonably well in the platinum upside, but nowhere near as well as I could have had I simply played the market leader.
So PDAC is this coming week, Rick. I'm sure you're going to be there. Can you share with listeners, if you were just starting out and you were going to PDAC, which is the biggest early exploration mining conference in Canada, how would you plan your week?
Well, the first thing is that I wouldn't buy the limited pass. In other words, I wouldn't just go to the investor center, the newsletter writers thing. I'd buy the whole thing. because the short courses that you get to go to there are invaluable. And it's frankly, during the question and answer session at the short courses, I never ask questions myself. What I do is I pay attention to who in the room is asking fantastic questions so that I try to compile an inventory of people who I should get to know who I don't know. My whole purpose, one of the purposes to go for those short courses is to learn from the smart people who are teaching them. And I try and make contact with those people too, so that I can question them over the next 3 months. But my particular goal during the question and answer session is to listen to who the smart people are in the room, who I didn't know. It's delightful after 50 years that with 30,000 people in attendance, there's probably 27,000 of the 30,000 who I don't know. And it's a wonderful, wonderful, wonderful opportunity to separate the wheat from the chaff.
So I lived in Dearborn, Michigan, where Henry Ford is from, for 10 years. And as you're just sharing that, there was a story I was told, I don't know if it's anecdotal or if it's accurate, but a guy went up into Henry Ford's office and said, "You don't know this, you don't know that, you don't know that." And Henry Ford had 10 phones in front of him. And he said, "You're right, I don't. But this phone, on the other end, there's a guy that does know that answer. And this phone, there's a guy on the other end that does know that answer."
I'll tell you a funny story about that. I used to have as a client a guy who had been the CEO of a major accounting firm. I won't identify the firm, but a major accounting firm. He was a great client. And he used me for what I could do. And at one point in time, I was making, on behalf of myself and clients, fairly substantial investments in the almond business. So I went to talk to this guy about the almond business. And I'm saying, I think this is true, this is true, this is true, this is true. Here's what I don't know. Like full and fair disclosure. And he got on his phone and he called Forrest Mars from Mars Candies. He said, "I think this guy's the biggest buyer of almonds in the world. Let's ask him." It was really cool. He was able, and I had the same circumstance when I was curious about some aspects of Russian policy. Adolf Lundin was able to call the head of Gazprom, who later became the president of Russia, Medvedev. He was actually able to call him and ask questions. So what you say, sadly, I don't operate at that level. I have to go to short courses at PDAC. But knowing who knows is damn near as good as knowing.
Yeah, and I'll bring up one thing from the Andre Gaumond interview, too, which you'll like, and you probably already know, but he would go to the professors at the universities and say, "Who are your top 2 to 3 students? I'll pay for their PhD, and they're going to do their PhD on my land." And so he was able to advance his project and get that intellectual capital into his company.
That's brilliant. And he might not have said this, but he was also connected at the highest levels of the government of Quebec. And I always knew, and Adrian Day always knew, funding him, that, and politically I'm not in favor of this, we were always backstopped by the Caisse de dépôt populaire. Quebec Inc. Was not going to let André fail. An important part of the province of Quebec's rural economic development policy was always mining. And ironically, Quebec leftist jurisdiction was always more pro-mining than any other jurisdiction in Canada. And as I say, while I'm a libertarian, I disapprove of that. As a speculator, the idea that the Caisse de dépôt populaire had my back was not a bad thing. And André existed, at the very, very, very highest levels there.
Rick, before you go, I'm sure you have a boot camp coming up, and of course you have your symposium in the summer. Could you tell us about it?
We have all kinds of things to sell to your listeners. The first is free. If you like what I have to say about natural resources and you want to personalize it, go to ruralinvestmentmedia.com. Once more, ruralinvestmentmedia.com. List your natural resource stocks, and I will, for free, no obligation, rank them. Please, no crypto. Please, no pot stocks. Please, no tech stocks. Just natural resource stocks, ruralinvestmentmedia.com. Second thing is you go to the Rural Classroom, join 17,000 other students. Look at 300 hours of recorded programming, including 5.5 hours on Introduction to Natural Resource Investors, teaching you how to be a resource analyst around your own portfolio. Absolutely free. Rural Classroom. Now the not free stuff. Every 90 days, we do a boot camp. A boot camp is an 8-hour-long, very deep dive into one topic or another around natural resource investing. We've done silver. We've done uranium. We just did an area play, the Golden Triangle. We've talked about prospect generators, exploration in general. These are 8-hour-long sessions designed to make the intelligent lay speculator knowledgeable enough that he or she can invest or speculate in the subject covered by the boot camp. Please do not come to the boot camp if you're in this for entertainment. If you buy the Sunday paper for the crossword puzzles and the funnies, you aren't going to make it through 8 hours, and you aren't going to review the recordings to make you a better speculator. You're not going to do that. The one that's coming up is copper. We have a superb faculty. We're going to talk to a noted industry expert about the copper market in general, about the structure of the copper market, about the cost challenges. We're going to talk to a noted copper geologist about an overview of copper geology so that you'll understand how to look at press releases and exploration programs. We're going to talk to a noted financial analyst in the copper business that will talk about the ins and outs of the balance sheets and the income statements. As you can tell, this is not a session for somebody whose investment methodology has got a hunch, bet a bunch. But if you believe in a looming copper shortage and you believe that the price response that will occur will be good for your portfolio, as I believe, this is absolutely a can't miss session. And then finally, the best work I do is the Rural Natural Resources Investment Symposium. Some tell me it's in its 30th year. I don't remember that far back. But every year, we think it's gotten a little better. And if it gets a little better after 30 years, it's pretty damn good. I believe it to be the finest retail natural resource investment forum in the world. It's held July 6th through 10, either in Boca Raton, Florida, or via live stream, wherever you are. For the first time in 20 years, the live conference will sell out in the month of March. We're running 3-1 ahead of last year's attendance. So if you would like to come see us live, which is what I would recommend, you will need to buy your seat in the month of March. And if you would like to stay in the hotel where the conference is, I think there are precisely 11 rooms left. We will sell out. We've secured 50 or 60 rooms next door at the Hyatt. In Central Florida, not walking 5 minutes in that heat, if you can avoid it, is worth doing. If you don't need to be there, you can join probably 3,000 other investors in 30 countries worldwide and watch the conference on live stream. Either way, live or live stream, you get access to the recordings for a year, and you're going to need them. We're going to give you more information in 46 hours over 4 days than you could absorb. We'll give you a big picture view of the world from people who teach you the way the world really is, not the way that CNBC or Fox wishes it were. We will give you access to financial analysts who have made money in natural resources for 40 years, not people who made their reputation in the last year and a half in a bull market. We will introduce you to money managers who have been principally employed in natural resources for 40 years, not failed tech or crypto analysts. Every single exhibitor, public company exhibitor at the conference, has been vetted. At most conferences, the qualification to be an exhibitor is a check that cashes. It's an advertising feature. At my conference, you have to be owned in my portfolio. No guarantee, Bill, sadly, that if I own a stock, it goes up. But there is a guarantee that every single exhibitor has been vetted, unlike any other investment conference in the world. Finally, with either the boot camp or the investment conference, if you think for any reason whatsoever that you didn't get your money's worth, I'll give you your money back. Now, we've been making that guarantee for 30 years. We've had to refund about 0.1% of the tuitions that we've charged. But that unconditional, even cheerful, money-back guarantee is your guarantee that we know we can deliver content that will be of value to you. Rural Investment Symposium, July 6 through 10 in Boca Raton, or from the comfort and convenience of your own home via live stream.
Rick, that 0.1%, did you ever talk to those individuals to get what their objection was?
The most common objection, and it's a fair one, is that they didn't have the background or sophistication to take advantage of the information. For others, health. Occasionally they were honest enough to say procrastination. Seemed like a good idea at the time, but then they didn't want to listen to it. But the most common objection has been that the content was at a level that people didn't have enough preparation. I have always suggested to those people, of course, that they go to the real classroom and prepare themselves for free and then come back and give me their money again. But probably some will, some won't.
Yeah. Thank you for your time and insights today, Rick.
Pleasure, Bill. Thank you. Are you coming to PDAC?
I will be at PDAC, and I plan on being at your symposium for a couple of days as well.
Fantastic. Well, we look forward to having you in both places.
Yeah, thank you.